So for today in social studies, you're reading pages 12 to 16 of the Bank On It packet. This might look a little familiar from the Choosing a Bank activity that we did on Thursday, but if you scroll to the bottom, you'll see the beginning of what you need to read for today. Opening and maintaining a bank account. Opening and maintaining a bank account is not as difficult as you might think. There are 4 basic things you have to do. Open the account, make deposits and withdrawals, record interest and fees, and keep track of your balance. Account verification. The first thing you need to do to open a bank account is to go through a process called verification. This is for 2 reasons. The bank needs to make sure that you are who you say you are, and you are able, under the law, to open a bank account. The bank may want to make sure you will be a responsible bank customer. The bank will need your name, address, date of birth, social security number, or individual taxpayer identification number, and a state or government-issued identification or ID. So your school ID, your state-issued ID, your driver's license if you're 16 or older, your passport, your matricula consular card, or your resident alien card. Banking terms. No matter what type of financial institution you use, all of them use some basic banking terms that you will have to know in order to open an account. Deposit. Anytime you put money into your account, it is called a deposit. Depending on what you deposit, cash, a payroll check, or a check drawn on an out-of-state bank, you may not have immediate use for the funds. The bank must first make sure there are funds at the originating bank, the bank of the person who wrote the check, to cover your check. You should ask the bank when you can use the money you deposit. Balance. The balance is the amount of money you have in your bank account. Your balance will change whenever you make a deposit or a withdrawal. Remember to record all of those in your check register so that you always know your balance. Withdrawal. When you make a withdrawal, you take money out of your bank account. You do this when you write a check, give a teller a withdrawal slip, or use an ATM. Deposit and withdrawal slips. These tell the bank how much money you are adding to or withdrawing from your account. Fees. Financial institutions may charge you fees for different services, including a monthly maintenance fee to keep your account open and a penalty fee if you misuse your account. Overdraft programs. Many financial institutions offer options in the event you overdraw your account. That means spend more money than you have. You can avoid the merchant's returned check fee, but you still have to pay the financial institution an overdraft fee for each item. Be sure to look carefully at the fees associated with this service, as the banks can be very costly. Activity 2. Making deposits and withdrawals. The purpose of this exercise is to practice making withdrawals from a bank account and keeping track of the balance. Read the scenario carefully. Complete the table and determine the new balance. Be prepared to share. Scenario 1. Carl opened a bank account and deposited $100 in cash. The next day, he withdrew $40 from an ATM. At the end of the week, he deposited $75, which he had earned by helping his parents and mowing a neighbor's lawn. What is the balance in Carl's account after he made the payment or withdrawal and deposit? We're going to work through this together if you are in the live learning class. If you are working through this on your own, please feel free to calculate this out. This is a good exercise for you to try. Deposit and non-deposit amounts. Bank accounts that allow you to add money to the account are called deposit accounts. Checking and savings accounts are 2 examples of deposit products. Checking accounts. A checking account allows you to pay bills and buy goods with the money you've deposited. When you write a check, use an ATM or debit card, or bank online. The financial institution takes the money from your account and pays it to the designated person or business. The financial institution makes a monthly record of the deposits and withdrawals made available to you either by mail or online. This is a bank statement. You've probably seen this in the mail. Your parents get them. Bank versus check cashing services. Even though banks may charge monthly fees, it is much cheaper to use a deposit account at a bank than a cash checking service. When comparing banks to check cashing services, other benefits include financial institutions provide the convenience of internet banking with access to your accounts and information 24 hours and 7 days a week. Using a bank account responsibly can help you establish a positive banking relationship, which can be helpful if you apply for a loan in the future, when you buy a car or purchase a home. You do not have to worry about cash being lost or stolen in this situation, and you can easily save money for the future. Savings accounts. A savings account is a safe place for you to save money. You generally will be paid interest on the money in your savings account. You generally cannot write checks on a savings account. You can often open a savings account with a few dollars, but you might pay a monthly fee if the balance is below a certain amount. You can keep track of your account balance by reviewing the account statement. Interest. Interest is a percentage of your balance that the bank pays you for keeping your money at that bank, if the account pays interest. Most savings accounts pay interest. Non-deposit accounts. Many banks also offer non-deposit accounts or products that are not insured by the FDIC. Stocks, bonds, and mutual funds are examples of non-deposit investment products. These carry some level of risk, meaning you could lose some or all of the money that you invest in these products. Bank personnel should provide a written explanation that these products are not insured by the FDIC and may lose value. It is important to understand these products and services before you buy them. You can find out more about non-deposit products through your bank. ATM and debit cards. An ATM card allows you to make deposits and withdrawals from checking and savings. You can usually check your account balance, print statements, and transfer funds between accounts. Some ATM cards can even be used in stores that accept ATM cards in your bank's network. It works like a debit card, but it is not as widely available. A debit card, also known as a check card, usually displays a MasterCard or Visa logo. It has all the functions of an ATM card, and it allows you to pay for goods and services at locations that accept MasterCard or Visa credit cards. It looks like a credit card, but it isn't. Your purchases are immediately withdrawn from your account. When you use a debit card to make a purchase, the retailer may ask you to choose whether you want to process the transaction as a debit transaction, where you input your personal identification number or PIN, or a credit transaction, where you sign a receipt in place of entering your PIN. Either way, expect the amount of the purchase to be taken out of your account immediately. Check with your bank to find out whether there are any fees or incentives for credit transactions versus debit transactions. Another kind of card that can be confused with ATM or debit cards is a stored value or a prepaid card. Prepaid cards often have the logo of one of the major payment systems, like American Express, Discover, Master, and Visa. These branded cards can be used at any merchant or ATM that accepts cards issued through their respective network to pay for goods and services. These cards do not link to your bank account. Therefore, money needs to be loaded onto these cards, and the value on the card goes down with each purchase. So now that we've learned a little more about these types of cards, you're going to go back to today's lesson and complete the discussion board post. Please remember to write and complete sentences when posting on discussion boards for social studies. Have a great day! Contact me if you need anything.